What's up, everyone? Welcome to the second episode of the Investing Penguin, covered calls and cash secured puts. For those of you who don't know me, I am the Penguin. And in this video, I want to share with you my top returning covered calls. And you might be asking, what contributes to my success? Well, first, I focus on annualized returns versus dollar amounts. It doesn't matter if you are investing $1,000 or $100,000. You need to focus on annualized returns. And I crunch the numbers using my spreadsheet to calculate those annualized returns. Remember, my goal is to hit 24 to 36% annualized returns. Also, I did my homework before buying these stocks, and I've been able to make crazy high returns, some as high as 208% annualized return. You know, my friend and I have a saying, lots of littles, and lots of littles can add up to big numbers. I'll do those little transactions all day long as the annual returns are good. Also, the cost of transactions today for retail investors are so low. I'm paying $0 to buy my stocks. I'm paying 25 cents to sell my stocks. I'm paying $3 or $4 for my options. 15 years ago, the broker commission fees would have killed your returns. Furthermore, I want to invest in stocks that pay dividends. Those dividends are like a bonus. Finally, I want to invest in stocks that if I get stuck with them, I would be willing to own them long term. So in this video, I'm going to break down those transactions so you can see. So let's jump into this. I covered this transaction in my first video, so I will run through it quickly. April 20th, I bought 200 shares of Exxon at just over $41 a share. I sold 2 covered call contracts for $2.16 for the May 1st expiration and the 41.50 strike price. I collected a premium of $430.66. Then on Friday, May 1st, Exxon closed above $41.50 a share, and the following Monday, my 200 shares of Exxon were sold at $41.50 per share. I profited $468.48 for 14 days, which is a 147% annualized return, and that is a great return. Here is the same transaction, but I have included the snapshot of my spreadsheet analysis for covered calls and cash secured puts, which calculates the 147% annualized return, and that is a great return. How about JP Morgan? That's a solid company with a good dividend. I would own JP Morgan long term. On May 13th, I bought 100 shares of JP Morgan at just over $84 per share. That same day, I sold 1 covered call contract for $1.26 for the May 15th expiration and the $85 strike price. I collected a premium of $125.33, and on Friday, May 15th, JP Morgan closed above $85. So the following Monday, my 100 shares of JP Morgan were sold. I made a profit of $183.14 for 5 days, which is a 158.36% annualized return. And that is a great return. Here is the same transaction, but I have included the snapshot of my spreadsheet analysis, which calculates the 158.36% annualized return. How about Coca-Cola? Another solid company with a good dividend. Warren Buffett owns it. I would own Coca-Cola long term. May 13th, I bought 300 shares of Coca-Cola at just over $44 a share. The same day, I sold 3 covered call contracts for 70 cents for the May 22nd expiration and the 44.50 strike price. I collected a premium of $207.99. On Friday, May 22nd, Coca-Cola closed above $44.50 a share. The following Monday, my 300 shares of Coca-Cola were sold at $44.50 a share. I made a profit of $280.31 for 13 days, which is a 59.27% annualized return. That is a great return. Here's the same transaction, but I've included the snapshot of my spreadsheet, which calculates the 59.27% annualized return. Once again, that is a great return. How about Qualcomm? Another solid company moving in the right direction. I think Qualcomm and cell phones will be around for a long time. So June 1st, I bought 200 shares of Qualcomm at just under $80 a share. That same day, I sold 2 covered call contracts for $2.05 for the June 12th expiration and the $80 strike price. I collected a premium of $408.66. Then on Friday, June 12th, Qualcomm closed above $80 per share, and the following Monday, my 200 shares of Qualcomm were sold at $80 a share. I made a profit of $428.29 for 14 days, which is a 69.87% annualized return. That is a great return. Here is the same transaction, but I've included the snapshot of my spreadsheet analysis, which calculates the 69.87% annualized return. How about Bank of America? Another solid company with a pretty good dividend. Warren Buffett owns it. I would own Bank of America long term. But check out this crazy high return. So on June 15th, I bought 700 shares of Bank of America at $23.85 a share. That same day, I sold 7 covered call contracts for 81 cents for the June 19th expiration and the $24 strike price. I collected a premium of $562.31. On Friday, June 19th, Bank of America closed above $24 a share. The following Monday, my 700 shares of Bank of America were sold at $24 a share. I made a profit of $666.86 for 7 days, which is a crazy high 208.27% annualized return. That is a crazy high return. Here is the same transaction, but I've included the snapshot of my spreadsheet analysis, which calculates the 208.27% annualized return. Once again, that is a crazy high return. How about Chevron? You might not like oil, but look at these returns. Plus, let's face it, we still need fossil fuels for a long time to come. July 31st, I bought 200 shares of Chevron at $82.66 per share. A couple days later, I sold 2 covered call contracts for $1.07 for the August 7th expiration and the $84.50 strike price. I collected a premium of $212.67, and then on Friday, August 7th, Chevron closed above $84.50 a share, and the following Monday, my 200 shares of Chevron were sold at $84.50 a share. I made a profit of $580.28 for 10 days, which is a 128.11% annualized return. And that is a great return. Here is the same transaction, but I've included the snapshot of my spreadsheet analysis, which calculates the 128.11% annualized return. How about Southern Company? A solid utility company that pays dividends. I would own Southern Company long term, considering electricity will be around forever. March 8th, I bought 500 shares of Southern Company at $58.50 a share. That same day, I sold 5 covered call contracts for 42 cents a share. And that's for the March 26th expiration and the $61 strike price. I collected a premium of $206.67. On Friday, March 26th, Southern Company closed above $61 a share, and the following Monday, my 500 shares were sold at $61 per share. I made a profit of $1,456.45 for 10 days, which is a 86.54% annualized return. That is a great return. Once again, here's the same transaction, but I've included the snapshot of my spreadsheet analysis, which calculates the 86.5% annualized return. How about Energy Transfer? Pays a great dividend. Pipelines are a valuable asset. I would own Energy Transfer long term. So March 23rd, I bought 4,000 shares of Energy Transfer at $7.72 per share. That same day, I sold 40 covered call contracts for 15 cents for the April 9th expiration and the $8 strike price. I collected a premium of $573.36. On Friday, April 9th, Energy Transfer closed above $8 a share, and the following Monday, my 4,000 shares of Energy Transfer were sold for $8 a share. I made a profit of $1,655.42 for 20 days, which is a 97.71% annualized return. That is a great return. Here is the same transaction, but I've included the snapshot of my spreadsheet analysis, which calculates the 97.71% annualized return. How about Bristol Myers? Pays a dividend. Everyone needs pharmaceutical drugs nowadays. I would own Bristol Myers long term. So on March 24th, I bought 700 shares of Bristol Myers at just over $62 a share. That same day, I sold 7 covered call contracts for 49 cents a share for the April 16th expiration and the $64 strike price. I collected a premium of $338.34, and on Friday, April 16th, Bristol Myers closed above $64 a share, and the following Monday, my 700 shares were sold at $64 per share. I made a profit of $1,447.39 for 26 days, which is a 46.5% annualized return. But then check this out. My dividend payment of $343 arrived a couple weeks later on May 3rd. And that's the icing on the cake. Once again, here's the same transaction, but includes the spreadsheet analysis for covered calls, which for this stock calculates a 46.5% annualized return. Well, everyone, this is just a fraction of the successful covered calls that I have completed over the last year. This is my second video, and there will be more videos coming each week. In my next video, I'm going to share some of my most profitable cash-secured put transactions. So bang that like button, smash that subscribe button, and share this video with your friends. Thank you for watching. Here's an interesting fact. The Goldilocks Zone is the area around a star where it is not too hot and not too cold for liquid water to exist on the surface of surrounding planets. In December of 2011, NASA discovered Kepler-22b, which was confirmed as the first potentially habitable planet orbiting in the Goldilocks Zone of a sun-like star. Money music. If you don't know who Ray Charles is, then you seriously need to add him and all of his songs to your Spotify. Ray Charles is a legend, and Greenbacks is one of my favorite songs by Ray Charles. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. I'm only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.